Okay, perfect. Can you guys see this?
Yep.
Okay, perfect. Now that we are back. So, in essence, what so there's two things, the bullish momentum and the bearish momentum candlesticks. So the bullish momentum is always going to open up at the bottom, and of course from there we're going to fluctuate to the bottom, but we're always going to close at the top. That's why it's bullish, and this right here simplifies everything. So you guys can see right here in the 1 minute time frame, we open up at the bottom, we came all the way down, and then we went all the way to the top, as you guys can see. Now on the other hand, the bearish momentum, we open at the top, we go a little bit up, we come back down, and then we close a little bit higher. Now I'm going to show you exactly how that looks on a better perspective. So this big candlestick right here that you guys see, let me just, there you go. So this big candlestick that you guys see, which is 2 days ago, should be Thursday. This right here is simplified on this day. You see how we open up right here, we came a little bit higher, and then at the end of the day we just went all the way down.
Mm-hmm.
Okay, let me just end this. Okay, can you guys still see me? For some reason it's not showing anything.
Yeah, I don't see. We hear you, but we don't see you.
Okay, perfect. I really don't know what's going on.
No,
Okay,
it's not
so
good.
okay, now with that, so right now, do you guys have any questions whenever it comes to the bearish momentum and bullish momentum? Remember, bullish means that it's going up, bearish means that it's going down.
Mm. Yes, no, no.
No, no questions. What about you, Jao? Are you good?
Yeah. Sorry, I was sort of confused at the beginning with the graph, but
Yeah.
now I'm getting it.
Okay,
Yeah.
perfect. I mean, if you guys have any questions, please let me know. That's what I'm here for. So, okay, now that we have that out of the way, now we're gonna go straight into my strategy. So, if you guys were a day trader, you guys know that you guys want to capitalize in a short movement that's gonna happen in 5, 10 minutes, kind of like that, you know. So, in essence, if you guys were a day traders, you guys would definitely you would bet that the market will go actually down on this candlestick, and you guys will profit all along the way on this one. That's how a lot of people make money, and that's how I used to make my money. But it's with that strategy is a lot riskier than anything else, and to be quite honest, I just hate putting my money at risk when the odds are not gonna be on my favor, because at the end of the day you're just betting for like a good 5 to 10 minutes, maybe an hour, maybe 2 hours. But I don't like to be looking at the computer for more than 30 minutes, if anything. So that is
Mm.
day trading. Now what I do is swing trading. What swing trading is going to be is that I hold my trades for days. So let's say that I bet that the stock market will go down on this day. Instead of me capitalizing, just let me just put a little circle. Let's say that I said that the stock market is going to be going down on this day. Instead of me capitalizing only on one day, what I do is I'm going to be capitalizing on the whole move. Not only one day, mind you, I'm going to be capitalizing in this whole move right here. So it's gonna be one,
Mm.
2, 3, 4, 5, 6, 7 days that I'm gonna be capitalizing on, and that I'm gonna be making money rather than just making money in just this singular move, which in reality is only 18, 15 minutes, if that makes sense.
Mm.
Okay. Yeah.
Yeah, so that's the thing that I do, and that's why this is so profitable, and it's less risk, more money, and in reality, it's statistically proven that guys actually make more money with this strategy than day trading. Day traders usually 99% of them they lose all of their money in less than 3 months because they don't know how to do nothing. They don't know how to calculate the risk, calculate their entry, their stop loss, nothing like that. Out here, it's gonna be hard for you to calculate anything like that, which that's exactly what I'm gonna get into. So now that you guys
Mm.
have that, now let's go and change. Let me erase this real quick. Remove drawing. Now we're gonna go into supply and demand. Do you guys have any idea whenever it comes to supply and demand, support and resistance, all of that?
No, no.
No.
Okay, so think about it like this. So think about the stock market like this. So there's buyers and sellers. That's where supply and demand comes, pretty much comes in conclusion. And how are you gonna be able to find those buyers and sellers? I'm telling you, the stock market is like a game, and once you crack it, you're gonna be able to make money pretty much anywhere at any given time. Um, the reason why I say it's like a game because it's so simple, but majority of the guys just overcomplicate it so much. In this case, what we see right here in this past I'll say week and a half, maybe two, because remember we are on the daily time frame, so each individual candle represents 1 day. So for the past week and a half, we have been rejecting every time we touch this level, which is 184.14. As you guys can see, I'm not making this up, this is actually real data that happened. The stock market went up, but we couldn't break above this level, and majority of the guys are going to be like, oh, it's just a level place, no reason whatsoever. But this is really important because that means that there's a lot of sellers here. There's a lot of psychology going on here, meaning a lot of people, as soon as we get to this level, a lot of people sell. A lot of people just don't like to hold. They said, you know what, I'm not trying to be in the trade. Or they're just people selling just because they're trying to take profits. So that happened not once, two, three, four, like for like a whole week and a half. And that's what happened. So in reality, whenever we see a ceiling like this is going to be a resistance. So that's going to be a resistance line. Think about it like a ceiling. Kind of every time we go up, we cannot find a way to keep on going up. We come back down. Keep on going up. We keep going down. But now, how you're gonna be able to make money from this ceiling, which is going to be a resistance line, is going to be once we break the ceiling, this the stock is just going to fly completely. Such as an example right here, we finally broke it, and now think about that ceiling as a floor. Once we break that ceiling, it becomes our floor, and that's what it's called, our support line. So ceiling is going to be resistance line, the floor is going to be our support line. And once we break it, if we had enough volume like this, that we actually did have enough volume, which I'm gonna show you how to see the volume. You guys are gonna see that we hold this level every time, and we're actually, even today we held it, as you guys can see. So um, it sounds a little bit, I wouldn't say funny, but it sounds somewhat like a game. But that's straight up what the stock market is. It's just buyers and sellers. And whenever you see it on the graph, it looks like a game because you see right here, selling goes down. Once we break it, it goes up. We hold. We're not going under it. We keep on holding. It goes up. So right now, if anything, if we keep seeing volume with NVIDIA, we're still at that floor level. Once we break the ceiling becomes our floor. So now,
Mm-hmm.
if we keep holding this level, as we can see, we're holding with a decent volume. All we need is a little bit more volume. Don't quote me on this because many things can happen. Nvidia could keep them going back up because all the conflicts that we had in the past is showing us that it actually wants to go up and it's showing bullish momentum. And this right here is actually one of my top strategies that I always use. I use supply, about support and resistance lines for me to actually see my trades and see my strategy and see everything play out, including my A plus setups and all of that. So does that make sense for now?
Yes, yes.
Okay, gotcha. Did you guys know about this? Is this kind of like a new concept? Nothing like that?
It's a new concept.
Okay,
It,
gotcha.
it's
How do you feel, Joe?
I mean, as you mentioned today, if you keep like applying and seeing it every day, I think I'll get like used to seeing the graph.
Yeah.
But I think I get the concept, like how you explain it about
yeah,
resistance
but
and holding.
yeah, I like this. Like you have this strategy, like when others they are selling, so you just you know uh, be patient.
Yeah, that's another thing. A lot of people just go in the stock market without a plan. A lot of people go in like, I don't know, maybe they bet on the stock market to go down here because it has been going down for the longest, and the reality just turns back up because there's another support line right here, as you guys can see. It's not as strong, but there's another one right here. Right here, as you guys can see. Why? Because we were trying to break it for like a few days. Let me actually make this a little bit bigger. So, I'm telling you, all the stock market is Support and resistance equals buyers and sellers. That's everything it is, just buyers and sellers. And a lot of people like to overcomplicate it, adding a bunch of indicators. I'm not gonna show you any type of indicators because I don't use indicators. Indicators, a lot of people are gonna sell you, telling you, oh, if you apply this indicator to your graph, the graph's gonna tell you when to buy, when to sell. All of that, they're just lagging indicators, meaning that they they construct themselves as the market goes, meaning that they're probably going to tell you to buy once the move already happened. So reality makes no sense. Yeah, and I'm not trying to get into it because in reality, it honestly makes no sense, and I've lost a lot of money just using them. So this right here just oversimplifying everything. That's how you guys are gonna become profitable, and that's actually how I became profitable. So as you guys can see right here, we broke this resistance line. Kind of think about it like a ceiling once again. We broke it because we couldn't break it at first, but once we broke it, we used it as a floor, as a support line. So resistance, once we break it, it turns into support. Boom, we broke it, we came back down, we touched it, we go back up. So yeah, it's once again, it's kind of like a game, and the same thing is happening once again. It happened today, as you guys can see. We actually holding this line really strong, and it kind of like feels like it wants to go up a little bit more. So that's the first concept that I want you guys to see. Let me see if I can show you another concept. Let's look at Meta. See if we have.
Yeah, so on Nvidia, so when is the right moment to buy and then hold it?
Oh yeah, that's exactly where I'm gonna go. Before I show you, because that's the strategy. Before I show you the strategy,
Mm,
you need to know the concepts, so the strategy
mm,
makes sense. Because all of this right here ties goes back up with the strategy. The
mm,
support and resistance line that I'm showing you right here is the same thing that I use with my strategy, and you're gonna see how everything ties out together. You're like, oh, okay, kind of makes sense. So now let
mm.
me show you another one right here. Let me see if I can. Oh, right here, I found it. I literally just found it. So this happened a couple, maybe like a month ago around. As you guys can see right here, let me just switch this to a white color, so it can make a little bit more sense. Uh, okay, perfect. Now it looks a little bit better. So as you guys can see right here, for the longest, we have been touching, once again, think about it like a ceiling. We couldn't break this ceiling because there's a lot of people just selling. So boom, we came
Mm,
back up, we sold, we sold, we sold. So that ceiling is our resistance line. So think about if you're trying to jump, you cannot break it because it's a resistance line on top of you. But once you break it, as you guys can see right here, once we broke it, and we broke it with a lot of volume, we're just
mm,
gonna hold that certain line until we keep going up. So we broke it and we came back down. We just held. We never actually kind of like fell apart from that line. So we're still like kind of like fluctuating on that line. And then once we get more buyers, it just keeps on shooting up. So you could have just predicted that the stock market was gonna go up here, and look, you would have made money in all this move right here. This is a roughly around, I'll say roughly around two, maybe a month and a half that you could have been making money on, as you guys can see. So
mm.
the stock, and once again, this is things that already happened. This is not like new concepts. This is not support and resistance has been a proven concept for the longest now. That's how people make their money, and history itself repeats itself. So you guys can see right here, you guys would have taken this, you guys would have made a shit ton of money on this move. And then of course there's the other part of, or when do I sell? And that's exactly what I'm gonna show you now. Let me show you another move. Oh, look, the same line that I just draw right now is actually happening once again today. So now we're gonna see if we hold or we break. If we hold this line on Meta, this happened today. If we hold this on Meta, we're probably gonna go up. But if we break it, we're probably gonna go down. It's all about reacting on what's gonna happen. We're not predicting, we're just reacting. So as of right now, there's no reason why we should react because there's nothing going on. We just need to see if it's gonna go up or if it's gonna go down, and then from there we can actually make our educated decision, if that makes sense.
Yes.
Okay, so no questions at all as of right now?
No,
No.
no.
No, okay,
it's
perfect. I
it's
hope
a lot
everything's
of
making sense. Does it make sense?
there's a lot there's a lot of learning, man.
Now, once again, if you guys feel like we need to run another code, we can easily do it once again, and I don't really mind because I'm trying to make sure that you guys get it. Okay, let me see. Okay, perfect. Now it's a little bit better. Now let's go into the whole strategy because that's pretty much how I make money. So the whole strategy is going to be the following. So before anything, do you guys? Okay, let me just pull up a random stock. Let's pull up iron. So look at this. Okay, so before anything, the daily time frame is for swinging, and the 1 minute time frame is for, of course, day traders use it and whatnot. Do you guys have any questions on the daily time frame or time frames itself or candlesticks or any of that before we jump into the whole strategy?
No, no. We you get that?
Yeah.
Yeah,
You
good.
gotta like hold
Now,
on to the market.
anything that you can have. Do you guys have it? So let's run a quick test real quick. So this right here, before anything, let me just go like this. One, two. Can you guys see the price? Can you guys read the charts?
Yes.
Yeah.
Okay, got you. So this is what happened today on today. So
Mhm.
can any of you guys tell me at what price target we open? What's the lowest that we came down to? What's the highest that we came down to today? And what price we closed today? I
Uh,
marked every single price for you guys, but yeah, all you
okay.
guys gotta do is just pretty much signal it. Oh, that price right there. Level two is, as you guys right here. This is level five, level two, level three. Those are just the names that I labeled it as. But can you
So,
guys tell me
so
when?
Okay, so first,
Yeah.
the so we opened at 45.51.
Nope.
No.
Nope. Remember what I
Uh,
told you? The long wicks right here. This long wicks. Well, so the long wicks right
it's a
here
lot.
represents the buyers and sellers, and pretty much how bad we actually went down and how good we actually went up. But the whole thing, I'm just gonna give you the answer right now, but I don't want to say it, but I'll keep going. I almost give you the answer.
So the middle one is like the price level 46.11 when the market open.
Perfect. Yes.
It's
oh,
attached in there,
Yeah.
and then the bottom one is the lowest that went,
Yeah.
and then the 49
39.
39 was the highest from today.
Yep.
Yeah.
And what and
And
what price did we close?
then 47, 42.
Perfect. Yeah, then you definitely got it. So now we go
So,
into the 1 minute time frame. You guys are gonna see exactly how it went down. Look, I want you. I'm gonna go and make this a little bit bigger. So this
mhm.
the darker color is when the stock market opened, and this right here is pretty much pre-market. So after this line is 9:30 a.m. EST when the stock market opened. Now we open at 46.11 as you previously mentioned, and you can see right here we came all the way down to 45.51. I'm just showing you how it works on the 1 minute time frame. And then
Mhm.
after that, what happened is we just went all the way up to 43.39. And after that, we closed at 47 42. So that's pretty much how everything's looking on the 1 minute time frame on a step by step every single minute how it went down. But this right here oversimplifies it in just one singular candlestick.
Mhm.
Yeah. So does that make sense?
Yes.
Okay, gotcha. Now, Joa, let me just erase this and let me go with this one. This is a little bit different. Hopefully, you remember. So, let's go with this. Can you elaborate on this one? What happened on this day? This is a bearish candle, so that's everything that I can tell you.
Yeah. Did it, so the market opened at price level 3, the 48.63.
Nope.
Let me see here.
48.65, right?
Yeah, 40, 60. Oh, no, my bad. No, it's not. So remember what I told you. Bullish candles go up, bearish candles go down. So it has to be the opposite on when it opened.
Oh,
Oh, gotcha. Okay. So it basically it opened at level 7, right? 53.37.
53.37. Nope. That's
No,
the highest point that we got to, but not that's not when we opened.
no.
So
So the first level 1. No, am I looking right? Yeah.
this one,
Yeah.
okay, perfect. That's good. We open right there.
mhm.
The highest it went was the 53.37,
Yep.
and then the lowest it got was the 48.65.
48.65. Nope. That's not the lowest.
48.02, my bad.
Yeah, 48.02. Yeah.
And then we closed on the price level 3.
Yeah, perfect. And I'm gonna show you exactly how it went down so you guys can see this. So let's put that close and let's put this as high, high, and let's put this one right here as lowest. Okay, so now it looks a little bit better. So before anything, when you guys are looking at candlesticks, the bearish ones, since we always go down, because bearish means that the market is flushing down, we're actually going down. Bullish, it means that we're going up. So now bearish, if you guys think about it, a way to think about it, bearish, we're always gonna open up and move down, and bullish, we're always gonna open down and move to the top. So with that being said, let's go and look exactly what happened on the intraday. Let's look at this. This is okay. We got it right here. Is it this one? Nope. No, it's not this one. My bad. Let me just go back 5 minutes. Let me go into the 5 minute. Perfect. So 1, 2, and 3. This is the day. So this right here, this is the day that we're looking at. Can you guys see it?
Yeah.
Okay, so this is the day right here. So you guys have a better perspective. So we opened at 52.78. We went up a little bit at 53.37, and then we came all the way down to 48.02, and we finally closed at 48.65. Now, does that make a little bit more sense how it worked?
Yes.
Oh, okay. So for example, it's always gonna start like it opens like it is always gonna be the same. So high, open,
Yeah,
close, and
yeah.
lowest.
Yeah,
Oh, got
or if it's a really really good candle, what's gonna happen is we're gonna open and we're just gonna keep going flying. That's if it's a really really good day. I'm gonna show you exactly how that looks. Um, well, if you were investing before that, that means that you just made a shit ton of money because the moment we opened, the candle just flew like this one. Can you see this one right here? Let me make it a little bit bigger. Give me a second. Like this one, we were just down a little bit, but then after that, it completely just flew. Do you see this one?
yeah.
So we
Oh,
opened, came back down, and then we closed all the way up high. That right there
wow.
means a lot of volume, means a lot of buyers. And if you were investing before that, you just made a lot of money. That's exactly what it means. Or this one right here. We opened, we came back down, but we also closed above it. So we're good. But manjas, and right now, these are just some basic knowledge. You guys don't got to think about it too much. And it's going to become second nature at one point. But trust me, I just want you guys to know that because it's definitely good for you guys to have this knowledge as we go as we move forward. So now let's go and start with the whole strategy itself. Let me go and move this out of the way. So now my strategy revolves on a few things. Let me let's start with this one because I actually took this one. Actually, let me go with RGTI. Okay, this right here. Look, I actually have my drones that I had from when I took it. Okay,
Oh,
I took it way back here on the at $17, and I sold it all the way at $58. That's like a 200% gainer. Let's see.
Wow.
Let's see. Yeah, that was like a 232% under two. I'll say now. I'll say like under a month, maybe a month and a half. Can you guys see that?
Mhm.
And I'm gonna show you
Yeah.
exactly why I took it. It's a conjunction of everything that you guys just learned. And trust me, it's as simple as that. Like I don't overcomplicate anything. So give me a second. Okay. So let me erase this, remove drawings, clear alert. There you go. So it's going to be a conjunction of everything. So there's going to be a few requirements before I go and jump into a stock. And the first requirement is going to be the following. First requirement is that I always see that the stock is actually on an uptrend. Pretty much it has been going up for a while. That could be 5 days, could be, and I'm going to show you how to find these stocks, but I'm going to let you know my strategy before anything. It could be 5 days, a whole week, a whole month. It doesn't really matter. As long as we are on an uptrend going to the top, that's my first requirement. Second requirement is going to be, are you guys familiar with SMA's, simple moving averages?
No.
No? Okay, perfect. So simple moving averages is as simple as, let me remove this. So these are the simple moving averages. They're just lines. And what they typically mean, they mean, for example, this simple moving average is going to be, it's called 10 moving average. So what the 10 moving average is going to tell you is going to tell you the price on average on the past 10 days. So it's going to recollect the price that we had over the past 10 days. They're gonna divide it by 10, and then it's gonna spit out a number, and then at that point the price right here, the line is gonna be at that price that is spit out. So that's the meaning, but you guys don't really need to pretty much know everything when it comes to technical wise and all of that. All you guys need to know is add the simple moving averages, which once again is a simplified number of the past few days. So this is a simplified number of the past 10 days. Out here is going to be 21 days, 50 days, 200 days. I'm just letting you guys know, but you guys don't need to know that, to be honest. If I didn't know what the simple moving averages mean, I would still be making money, because the following, all you guys need to know is that once you add the following simple moving averages, which is going to be the 10, 21, 15, 200, all you guys got to make sure, and this is where my second requirement is going to come in to the whole strategy, is going to be that the 10 moving averages, 21, 50, and 200, all of them are stacked up all on top of each other in numerical order. We got the 10, we got 21, we got the 15, then we got the 200. What this means, it means that we are on a strong uptrend. So remember how I told you that the first requirement is going to require us for us to see that the stock is actually on an uptrend? Okay, that's good. But now this is just going to solidify the fact that we are in an uptrend once we see all of this stacked up all on top of each other, if that makes sense.
Mhm. Yes.
Yeah, ask me any questions, because that's why I'm here for you guys.
Mm,
Do you guys don't get?
no,
Yeah, what happened?
You- About the SMA, right? It's
Yeah,
simple move.
simple moving averages. Once again, you're gonna add four of them: the 10, 21, 50, and 200. Honestly, you guys don't need to know what that means. All it means is that once we have all of them stacked on top of each other in numerical order, 10, 21, 15, 200, that means that we are on a strong uptrend.
Mhm.
Yeah,
Okay.
but remember, we're all of this is happening on the daily time frame. On the daily, so every single candlestick is a daily time frame. My bad. It
Mhm.
represents one day.
Mhm.
Yeah. So far, does that make sense?
Yes.
Okay. Perfect. Yeah. And feel free to ask me anything as we move forward.
So the SMA is a 10, 21, 50.
And 200.
No,
Yeah. Make sure that you write it down. That add that on the daily time frame.
Yeah. 10, 20,
10, 21, 15, 200.
21,
15, 200.
15, 200.
Yeah.
15, 200. Okay.
Okay, perfect. Now that we have that out of the way, so now I'm gonna show you. So we're gonna recap everything in a sense right now. So before anything, the main thing, the first thing that I'm always looking at before I enter a stock, first of all, stock has to be in an uptrend, and stocks don't typically move on on a line like this, right? They typically don't move like this on a straight line. What they're gonna do is it goes up, it's gonna come back down. It's gonna go up, it's gonna come back down on a staircase scenario pattern, and that's exactly what we're looking for. So first requirement, stock has to be moving up. Second requirement, the stock Second requirement, the stock is gonna make. There you go. You gotta guys gotta make sure that all the simple moving averages are gonna be stacked up all on top of each other. Now that we have those two requirements out of the way, now the last requirement is gonna be that the stock itself is gonna retrace back to the 10 moving averages, as you guys can see right here. Um, Due to the fact that every time a stock moves on an uptrend, I already told you guys it moves up, it comes back down. So we want to actually capitalize on the movement once it comes back down. As you guys can see, every time it comes back down, it goes up. Every time it comes back down, it goes, and that's exactly how we want to catch it. We want to catch it once it comes back down, but we don't want to catch it at any given moment. There's a specific way on how we want to catch it. We want to make sure that we catch it once we touch the 10 simple moving averages. And once again, just because it touches the 10 doesn't mean that we're going to go in. We're going to go in once we find and once we see buyers buying the stock. So when I talk about buyers, this is not an 18-year-old with Robinhood just buying $500 worth of worth of a stock. These are going to be corporations. These are going to be banks. These are going to be investors buying that particular stock. And since we are trading on mid cap stocks, one investor can go in and they can blow up the stock in just in 1 or 2 days. So that's exactly how we wanna make sure that we approach all of this. So now that we have that out of the way, in this case, what I seen in this particular stock, it was that we made the huge move up, as you guys can see right here, from here all the way to the top. The SMAs are all stacked up, all on top of each other. We got the 10, 21, 15, 200. So we got check, check. Second thing is going to be that the stock market itself is coming back down to the 10. And as you guys can see, we touched the 10 many of times. However, I did not enter because my strategy revolves that we got to touch the 10 and have some volume. We had some volume on November 12th, and that's exactly the day that I went in. So this is volume right here, so you guys can see it on a better perspective. You guys see this volume right here? This right
Yeah.
here are investors, corporations, bankers, people actually dumping millions and millions and millions of dollars into this particular stock. So that right there, I mean, this is as clear as day that this happened. You guys can see we have a lot of volume, way greater than the other days. Now that we have that out of the way, and this day right here represents this candlestick, you guys just can see how huge this candle was. Now, you guys could have just entered this day at any given point. However, I waited for me to break the ceiling that we had. Remember how you guys told you supply and demand, support and resistance? We had a resistance line at 17.40 that we came in and we tried breaking it for the past. I'll say that we tried breaking it for the past 3 days on this week. Then we came back down. Same thing for the past 4 days on this week. Nothing happened. Then we rejected it once again. So remember, guys, this right here is like a ceiling. Every time we go back in, we cannot break it. It's gonna come back down. We go back in, we cannot break because it's like a ceiling. It's a resistance level. However, on this day, we finally broke it with a lot of volume, and that's how I knew. Okay, you know what? This stock's gonna fly, and I made 20% only in this day itself, just this day. I think the 20% I went in with $5,000. I made a good amount of money. I cannot remember to the top of my head, but I made a really good amount just on that singular day. But I didn't sell. I didn't sell anything on that day. As you guys can see, after that, it just kept on flying, kept on flying, kept on flying, kept on flying. You guys see this?
Yeah. Wow. It
Yeah,
went very high.
yeah. But now, so we got our entry. Now let's go and talk about the way that we're gonna be able to actually secure our profits. Before we go and talk about it, how do you guys feel about the whole thing, the whole process?
It's
I feel it's good. You're going
it's
every you're showing every detail it's just like keep practicing it, and I'll get like the hang of it.
Yeah. How about you, Mr. Joel? How do you feel about it?
No, I'm happy with it.
You see how it plays out, right?
Yeah, no, man, it's a lot of information, man. It's great.
Yeah, okay, appreciate it. Okay, so this is the thing. So now, so we talked about our entry. Now, once you entry, I mean, my bad. Once you enter the stock itself, the next thing that you are gonna be doing is gonna be the following. Is gonna be you actually setting up a stop loss, because as many things, a lot of things can happen. The statistics don't lie. So in essence, what we're gonna do is as soon as we enter, we're gonna set our stop loss on the lowest point of that day. Remember how I told you guys low point, highest point, and everything? So this day, the lowest point was at, as you guys can see right here, was at 1665. Can you guys see that?
Yes.
Yeah.
Okay, so that's the lowest point of the day. So we enter, let's say it could be with $5,000, it could be with $10,000, whatever it is. And I'm gonna show you how to calculate all of that, so you guys don't feel like, oh, lost or nothing like that. So whenever we enter, what we're gonna do is we're gonna set up our stop loss at the lowest point of that day. I'm gonna put it as red so you guys can see everything how it's gonna be playing out. And as you guys can see, once we have set up our stop loss, we never came back down and touched it, like ever. Right now we're actually coming back down, but that's, I'm gonna go into when you guys are gonna be cutting your pretty much everything, when you guys are going to be securing your profits, because the last thing you want to do is for you to actually see this go all the way up and come back all the way down. Me, I secure my profits at the top. I'm going to show you how I did it. But look, so in essence, let me go and change this to a green color so you guys can see this. So this right here was a 1 to 30 risk to reward. Do you guys know what that means?
No.
So 1 to 30 means that per every dollar that I put in, I made $30 back.
Mhm.
Yeah, and
Wow.
and that's actually a lot. Yeah, I was gonna tell you that's a lot, because if you see a lot of other traders, they always target a 4-to-1 risk to reward. They always target a 2-to-1 risk to reward. This right here, per every dollar that I put in, I made at least $30 back. Now, how was that possible? Is because of the following. Now let me show you this. Now, for you to secure every singular profits, I have some certain targets. So everything that I do is I set up a stop loss, but I do not set up a take profits. So I pretty much just let it ride, because every single stock, these are mid cap stocks. This can blow up all the way to 100, 200, 300, 400, 500% in just 2 to 3 weeks. But at the same time, is it going to happen? Is that going to happen every single time? No. Majority of the times what happens is a stock blows up to 30, 40, 50%, and after that comes back down. But this one was one of the few that actually blew up for 200%, and I was able to catch it. But still, the other ones, 50% in just 2 to 3 weeks is actually insane. And I'm gonna show you another ones that I actually took, that I actually made a video about it when I took it, and the following day I made a video on how I made just $500 from that particular stock. But I'm gonna show you right now, pretty much live, so you guys can see it. So but in essence, the stop losses that I have is just all mental. So whenever we're up 20% of our initial investment, that I'm gonna go and calculate everything, and I'm gonna multiply for 30%. Let's just do quick math so you guys can actually have a quick overview. I don't want to confuse you too much. I'm gonna put just regular numbers. So let's say you went in with $5,000 in this certain stock, right? $5,000, and now you guys just made a 20% profit, which if we see the graph should be like around here, 20% profit. So times 20%. So that means that you made $1,000. That means that now all in all you're up $6,000. Now what you're gonna do is you're gonna get $6,000. You're gonna multiply it times 30%, and you're gonna be taking in profits 1,800, and the rest. So you're gonna sell $1,800 worth of the stock, and the rest of it you're just gonna let it ride, so you can actually make more money out of it. Because if I would have sold it on this day, I would have missed out on the on the next wave that we had. So For me, the take profits that I have is once I reach 20% on profits, I sell 30%. Once I reach 30%, I sell another 30%. Once I reach 40, I sell another 30%. Once I reach 50, I sell rough around 40 to 50% because at that point we already blew up a lot. And it keeps going down on intervals of 10, if that makes sense.
Yeah.
Yeah. Any
Okay.
questions whatsoever?
No, no,
No?
no.
Okay, got you. By the way, it says right here that this call is gonna end in 5 minutes. So let me actually, we're gonna wait for the call to end and I'll send you another link so you guys can join, but let's keep on going. So now that we have that out of the way, the next thing I want you guys to see how powerful this strategy is because this wasn't my first time that I enter. I re-enter once again on this day. Can you guys tell me why I re-enter? And I actually it was this 2 days that I re-entered. Can you guys tell me why?
It was going up.
Okay, so let's start from the beginning. So first thing, it was going on perfect.
And then go to the resistance point there.
Yeah, but before that, what did we have? So the second requirement. What is the second requirement?
Mm,
The second demand.
Kind of like that, but
Uh,
no, that's maybe our last
what
requirement.
is it last requirement?
Yeah. So what about the simple moving averages?
oh, the
Uh, the 1021.
15200. What are we
100.
looking at on the 1021 15200?
The simple moving averages.
Yeah, what are we gonna be looking at? It's literally right here in front of you guys. What are we looking at?
They go like pretty much together, like a.
Yeah, they're gonna be what stuck up,
Mhm.
stacked up on one on top of the other, right? In numerical
One.
order. So you got the 10, 21, 15, 200. So what I was looking at on this day, it was once again, Joa actually said it. First thing, it was going up. So you guys can see how this strategy just repeats itself, and that's how I'm able to just catch it. At one point, you guys are gonna see it. You're gonna be like, okay, this is just second nature. So after I bought it, it went up and at this point, I was already up like 60, 70%. I was up like a lot already. But then it came back down to this line. And I'll say a bunch of people that don't know about stocks, a lot of people would be like, oh, you should sell because now you're actually down. You were up 70%, now you're just up 50%, you should sell. But this is the thing, it came back down to the 10 SMA, and that's our confirmation for us to buy because that's the whole strategy. The strategy is that it goes up, the SMAs are stocked up. We came back down to the 10, and look at this volume that we had the following day. Remember, volume means investors, corporations, bankers, every single
Oh
one of
yeah.
them just going back in. So you guys can see right here, we had a bunch of volume, a bunch of buyers touching the 10 SMA. So that's the whole strategy. And besides that, we had the break of this ceiling, which it was a 33.97, and we broke it with volume once again. So you guys could have waited for this to break, and let's say you would have put once again, our stop's always going to be at the low of the day. In this case, it's going to be at 30.56. And look, let
Mhm.
me just change this to a red color. And from there, you could have easily made at least a 1 to 5, meaning that per every dollar you would have made $5 back. As you guys can see, actually, let me give you the specific number, how much money you would have made if you would have re-enter on the second leg exactly when I enter. So you could have made an extra 30% after you enter on the second entry, and the first
Wow.
entry was roughly around 100%.
Wow.
Yeah. So does that make sense?
Yes. Yes. Yeah.
Yeah. It's okay. So perfect. Now, one thing is gonna be that yes, you're always going to be selling on intervals of 10. However, there's one specific time when you should sell everything because 9 times out of 10 it's just going to keep on going down. And that's how you're going to be able to protect your profits. Because at the end of the day, you don't want to give money back to the market. The way that I do it, let me get rid of this. Um, Remove drawing. So let's say you would have entered. Let me get rid of this as well. Remove. Okay, so let's say you would have entered on this day, right? On the exact same day that I entered. And you were taking profits at 20%, 30, 40, 50, 60, all the way to 100%. At one point, you shouldn't sell unless my bad, you shouldn't sell the whole thing, your whole portfolio, unless we actually break the 10 SMA and we close under the 10 SMA, meaning that at the time that the market closes, we're actually under the 10 SMA. Oh shit. Damn, it fucking died. Well, it happens.
No,
Yeah, we're back. Yeah, so it died. Well, it didn't die. So the call was, I think it was just for an hour. So this should be for another hour, and we should be good to go. So is everyone back?
yes.
Okay,
Yeah.
perfect. Okay, got you. So, as of right now, remember what I told you guys. The only time when we should completely sell out of the stock itself, like 100%, like no more 10%, no nothing, is once we finally break under the 10. So on this day, I sold everything. I think I had like $3,000 left running because I was already taking profits. And on this day, because we closed under the 10, let me just make sure that you guys can see it a little bit better. Right there, boom. So right there, this day, as you guys can see, we finally closed under the 10. That means that we should just sell it because look what happens after that. You see, we just completely just flush.
It's not you're not sharing your screen.
Oh, no. Damn. Okay, so allow sharing window, allow sharing screen. Okay, perfect. My bad. Okay, can you guys see this now?
There we go.
Yeah.
Okay, perfect. So remember, guys, the only time when you should actually sell 100% of whatever you guys got is once we break under the 10 SMA. So this is why we use the 10 SMAs. We didn't use anything else besides the 10 SMAs, the volume, and price action. This is action, the candlesticks. So as you guys can see, if once I enter the stock market, and let's say you guys would have entered with me, we wouldn't have sold in any singular durations around here. I'm talking about like the whole amount that we had until we actually close under the 10, which is on this price action, which is at $46. And by the time we bought was at $17. You guys can do the math yourself. That's a lot of fucking money that you guys could have made. Um, but is that clear? Once we break under the 10, look what happens. It just completely just flushes down.
Yeah. After that day, yeah.
Yeah. So as of right now, that's the strategy itself. Now we're gonna have to jump into what's it called, into money management and making sure that you guys are going in with the proper size so you guys can make money and not risking a lot and all of that. But before we do that, does this right here make sense?
Yes.
Yeah. What about you,
Yes.
Joa? Does it make sense?
Yeah. Yeah, for sure.
Gotcha.
When it goes like one on top of the other, then the 10, 21, 15, and 200. Got it.
Yeah, perfect. I mean, as long as you guys are getting as much as value, that's everything. So I'm gonna show you another example on. Let's look at iron. It's the same thing. Let me see if I have this. My As you guys can see, I took it right here. That was my second entry, but my first entry was. Let me see if I still have it. Oh, there you go. I still have it. Yes, sir. Look, I bought this one at $29, almost about hit 30, and I took it all the way to $70. That's like over 120% of a gainer. And this is another one. Yeah, so let me erase all of this and I'll show you exactly how it went down. So uh, I want you guys to let me just put it back into how, there you go. This is exactly how it was forming up on that day. So what's the first requirement that we're gonna see?
Mm,
Do you guys remember the first requirement that we're gonna see in with our stocks?
So you mean when you purchase, right? When you
Yeah, so before we purchase the stock, we have certain
mm,
certain requirements. Remember, we had four requirements. What's the first requirement that we always see? It has to be on the trend. What's the trend?
Support and resistance?
No,
Or
no. So the first requirement is gonna be what? What's happening right now?
Uh, the
Look at this. What's happening right now with the stock itself?
it's going up and down?
Yeah, it's going up. So what's the first requirement?
Oh, set our opening where the candle's like the lowest candle.
Nope. No. What's our first requirement? So
Uh,
let's say that I was looking at my watch list, and this is exactly because this is exactly how it played out on this day. This day, I exactly seen it like this right now, like this. So what would be our first requirement?
so the demand, like the
hmm.
Nope. Okay, look, I'll let you know. First requirement is gonna be that the stock itself is going on an uptrend. Do you guys see this? The stock is going on an uptrend. It's going up, right? That's the first requirement.
mhm.
Now, second requirement that I want to see is, let me put it back. I don't know why I did that. There you go. Second requirement is gonna be that. Let me put it back. Second requirement that the SMAs are gonna be what?
The SMA 10, 10, 21, 15, and 200.
Yeah. What's gonna happen with the SMAs? Like they gotta be in the
One on top of the other.
correct. And how do I want them to be on top of each other?
The 10.
The 10,
21,
okay,
15, and 200.
okay, perfect. So that's exactly how we want to see it. We want to see in numerical order 10, 21, 15, 200. Now that we have that out of the way, that's the second requirement. Our third requirement is that we want to make sure that we are bouncing at the 10 SMA. What does that mean? Is that, remember how I told you stocks don't typically move up on just on a singular shot like this. It goes up, it comes back down, and we always want to make sure that we capitalize when it comes back down, right?
Yeah.
Okay, so now right here, as you guys can see, when I opened the charts and when I seen the stock, this was my view. This right here was my view. This right here. So what I seen it was that the stock already made a huge move up. We had the SMAs at 10, 21, 15, 200 all stocked up, and now what I have is the stock is coming back down to the 10. And a lot of guys are gonna be like, "Oh, the stock's going down. It doesn't really matter. Now you should sell this and that and that." But look what we had the next day. What did we have the next? Oh my bad. The same day. What did we have? Look at this.
It's going down
Oh,
again.
it's going
and then
up.
going up.
Yeah,
There's,
but why is it
there's a
going up?
lot of buyers.
Yeah, a lot of buyers, a lot of buying pressure, a bunch of institutions buying the stock, a bunch of bankers, a bunch of corporations buying the stock. So once we had that, plus we were bouncing at the 10, and we had a lot of volume compared to the other days, I was like, you know what? This is the perfect time for me to go in. And the last requirement is gonna be what? Well, this requirement you guys don't gotta have it, but if you guys do happen to see it, it's gonna be even better. So what's gonna be the last requirement? You guys mentioned it. It was the first thing that you guys mentioned.
The stock go up.
No, no. So we're talking about the last requirement.
Uh,
Remember support and resistance?
support and resistance equals buyer. Oh, okay.
Yeah. So look at this place right here. So right here we got 1, 2, and 3 days that we were rejecting this zone at exactly $30, right?
Yeah.
And once we actually broke it, it was the day that I bought it. And the reason why I bought it also is because we have a lot of buyers. You see this?
Mhm.
So we came back
Oh, well,
down. Does it make sense?
To the
yeah.
resistance.
Yeah.
Yeah, and I want you guys to look at this after this. What happened next day? So just look at this. It just kept going up. You see this?
Down and then go up again.
Yeah, look. It just kept going up. And now the thing with this is that once you enter, remember, you guys are gonna find the lowest point of the day, which in this case is gonna be 2708, and you guys are gonna put your stop loss at that particular day right there. So let's say that this right here is gonna be your stop loss. Let's switch this to red so you guys can have a better perception. And then let's put this all the way at the top. So this is also a 30, maybe a 40 to 1 risk to reward, meaning per every dollar you made roughly around $30 to $40 back. You guys see this?
Yeah.
And also on this one, I took another trade. I want you guys to tell me, when do you think I took another trade? So let me remove this. Before anything, let me put some lines and you tell me when I took another trade. Let me put a line here, let me put a line here, and let me put a line here. So which level do you guys think I took a trade? Was it level 3, level 5, or level 4?
Level 5.
Level 5, why?
Because it was like there was like resistance, but after it broke it to high. Or am I wrong?
I mean, you had it right with level 5, but why is that? Remember what I told you. So go back to the beginnings. What are going to be our requirements?
Support and resistance.
No, our first requirement was going to be,
Oh,
Stop growth.
yeah, stop going up, right?
yeah.
Mhm.
So look at this. I want you to look at this. So even after we bought it, the strategy played out once again. So look, the stock went up. The SMA second requirement, SMAs are stacked up all on top of each other. We got the 10 to the 1, 15, 200 stacked up. And then after
Mhm.
that, we came back, as you can see, we came back down to the 10, but we didn't just come back down to the 10. Remember, our final requirement for us to buy is if we have buyers. So once we came back at the 10, look at the amount of buyers we had. Do you see this big line right here?
Yeah.
So boom, we had that right there, and I re-added. I think I put another $2,000 back. So I re-added once again more, and I put my stop loss all the way at the low of the day. And look what happened. We just never came back down and touched it, and we just kept shooting up.
Mhm.
You see this? And also, when do we actually sell completely out of the stock?
In
Oh,
level 2.
no,
No.
no
No.
level 2 is on top.
On top the
58.
Where
Uh, because the 10 it start going down.
correct. Okay. So look, I'm gonna give you some price numbers, and you guys tell me when you completely sell out. So which one is it? Level 5, level 4, or level 3?
Uh, level 4
Level 4. Level 4 is this one up here. Why?
because it's hit the top and then start going down.
Yeah, but that's the thing. You never know when the top is gonna be. So
Yeah, I was gonna say that.
yeah, well, so
Mhm.
this right here it could be going up, but you never know if this is gonna be the top. So we don't sell right here. We
Mm.
completely sell. I mean, mind you, we're gonna be actually taking profits all along the way right here, 20%, 30, 40, 50%. But once
Mhm.
we finally take all of our money out, when's it gonna be at? So we have level 5 at 6103, which is this one. We got level 4 and we got level 3. When do you think is gonna be the proper time for us to sell like everything?
Mm,
Okay, I'm gonna give you a hint. Let me remove this level. So now we have level 5 and level 4.
But level 4.
Level 4, why?
No. Let me see. Because go down. So the SMA is on at 61.
Yep.
So the 6103
Yep. And now why?
is because the SMA, so it's go 1021, it start going down.
You have it right there, but not. That's not really the reason why. The reason being is because, let me just remove this out of the way, is because we finally broke under the 10. Once the stock finally breaks under the 10 SMA, look what happens. It just flushes down. Now, mind you, it kept going up for a bit, but it's statistically proven it's gonna go down, and that's exactly what happened. You see, you saw that right here. Now it's right here all the way at the bottom, and that day was specifically when I sold it.
that day.
Yeah, this day because we broke the 10. So you see, ever since I bought it, we never broke under the 10. This day we broke it, but we never closed under the 10. So we kept going
So
up.
it,
Yeah. Go ahead.
okay.
Yeah, so we're always gonna sell it once we close under the 10 SMA. Once we actually finally close under the 10, that's when we sell it and we say bye bye because at that point, it's statistically proven it's just gonna keep on going down.
So only sell everything when it's a gold uh, down the SM the 10
Yeah, under the 10 simple moving average, if that makes
under
sense.
under the 10.
Yeah. Give me one quick second. Let me just grab some water.
Okay, go ahead. Yeah, only sell everything under the 10 SMA average. Yes, he's right because it goes. You see how the line goes in here,
Hmm?
or the line goes up. It never hit like a. It's like you mentioned, like a gold down. Look at right here where he sold. It's this day right here. Is when the line, the 10 SMA, will start like a going down.
Okay, so far we went
See that?
through. My apologies. So far we went through a lot of it. Do you guys have any questions? And please, I definitely want you to ask some questions because I know it was a lot. And me myself, I probably would have been confused as hell.
No, but we absorbing a lot of information, but you know the basic and you give them like the whole strategy, uh, you know, and we taking notes, uh, but we're learning.
Okay.
Yes. At this point, like when you mention like for like when you sell everything, I understand. Like, and I explained to Han,
Yeah.
like when the line, look at the line, like never like make any movement down. So it just keep going, like in all the days, the day trade is going up, 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 up. But as soon as he saw like it go down, and then he sold, and then after that, so it's just going down.
Okay.
Yeah.
Yeah. Does it make sense for you guys? Any questions whatsoever from the moment that we started doing anything?
No, no,
No.
no.
Okay, perfect. Okay, now let's go into the most important part of this video. And this, I'm telling you, when I tell you this is right here what turned me profitable. Even though the strategy itself, it is a good strategy, but the strategy will be nothing if it wasn't by risk management. Now, how do you, Mr. Joel, how do you pretty much manage your risk as in right now? Do you have any certain calculation that you do, any certain mathematical equation that you have, or you just out of the top of your head you just put in $4,000, $5,000 into a stock?
Yes, I just put it on. So it's no plan, no. You know, it's a mostly like people like on YouTube like talking about certain stock, and then you know, and of course like some heavy ones like McDonald's, like Meta, stuff like that. That's all.
Okay. Okay. Perfect. Now, what I'm gonna show you is gonna blow your mind because it blew my mind. I'm not gonna lie. So I hope that it pretty much kind of like does the same thing for you. So let me go and put this right here because what I'm gonna show you is this. I'm gonna send you this calculation to your son right now. This is a calculator. Boom. So what this calculator is gonna do is gonna pretty much tell you how much shares you're supposed to buy, and everything's gonna be in confluence to your account balance. So let's say your account balance is at 30,000. Based out of your account balance, you're gonna input two numbers, which is gonna be your entry and your stop loss, and it's gonna tell you, oh, you can only be risking 100 and something dollars, and you can only be putting this amount of shares. Now, I'm gonna show you exactly how to do that and somewhat of a perspective, so you can have a better, I'll say, visual because I learned by pretty much uh, seeing everything visualized, and I hope that you as well. So, for
Yeah.
example, let's go and let me just make this a little bit smaller. So, okay, perfect. Not that small. There you go, like this. So, as of right now, um, So we can have more numbers pretty much nailed down. So how you said that your trading account is at 30,000, right?
Yes.
Okay, so let's do $30,000. So let's say that we're trying to go into iron, right? This one right here, right now,
Mhm.
right this second. Let's go. Let's go and pick a better number. Actually, let's go and pick this one. That's fine. So let's go. You're trying to get into iron right now, and this right now fluctuating. Let me get that back. Okay, boom, we're back. So 30,000. So look, so the first thing is gonna be you inputting your account balance. Can you see this? This calculator?
Yes.
Okay, so first thing is gonna be you inputting your account balance. Second thing is gonna be you putting your risk. You will never, I'm telling you, never switch your risk more than 0.5%. And if you do the math, 0.5%, if you pretty much do the math all the way to it takes you all the way to 100%, you will never blow up your account due to the fact that we're only risking so little per trade. Now, the two numbers that you're gonna put is gonna be your entry price and your stop loss. Those are the two numbers. Let's say after that you're gonna hit calculate, and I'm gonna show you what to do up next. So entry price is gonna be the price that you're gonna enter as of right now. So let's say we're looking at iron right now, and everything has pretty much all our requirements have lined up to a perfection, and that's exactly what we want. Now, what we're gonna do now is we're gonna put the price that we're gonna go in, which as of right now is gonna be $46. So let's put $46. The stop loss is gonna be, let's see if you guys remember. Where do we usually put our stop loss?
Is on the lowest of the day.
Perfect. Yeah, perfect. Yeah. I'm glad that you guys remember. So it's gonna be at the lowest of the day. So in this case, the lowest of the day is gonna be at 45.45, as you guys can see. This is in today's day. Now we're gonna go and input it right here. So it's gonna be 45.45. Now this is where the magic happens. So all you put in was three singular inputs. Was your account balance, which is just gonna be growing, and stop loss is gonna be 45.45. My bad. And entry and stop loss. Those are gonna be the three different inputs that you're gonna put into this calculator. And then after that, you're gonna go and press calculate. And this is the magic. Now the magic is that based on this calculator, if worse comes to worse, let's start with how many shares you can actually put in. You can buy 172 shares at this price right now, and then that means that you're gonna be using almost $8,000 for you to go into this trade. Almost $8,000. Now you might be thinking, "Oh, that's a lot because what if I lose a lot of money?" But this is where the magic happens.
Mhm.
With the stop loss that we put, which is 45.45, as you guys can see right here. If worse
Mhm.
comes to worse and if we hit our stop loss, we're only gonna be losing $150, which, trust me when I tell you this, it's nothing compared to how much money you're gonna be winning. So when I found out about this, it's crazy because you will never ever blow up your account. And if we do the math right now, remember how I told you our first take profits is gonna be at what? Do you guys remember?
Got 30%.
30%.
No, well, 20%. It's gonna be at 20%, and we're gonna take 30% of our profits itself.
Oh, okay.
Okay, so
So
but
the
let's
number is a 30%.
yeah, the 30. We're gonna be taking 30% of the whole portfolio. I mean, of the whole position, but the profit target is 20%. So I'm gonna put these numbers into some visuals so you guys can see. So you guys are aware that you guys are only gonna be losing $150 if worse comes to worse, right?
Mhm.
Yeah.
Okay, so now I want you guys to see this right here. So you guys are gonna be going in with practically $8,000. So let's use $8,000. $8,000 times 20% is gonna be $1,600 that you're gonna be on profit. Now, before I go any further, you guys are risking only $150 for you to make $1,600, and that's gonna be our first take profits. That's our first. From here, there's gonna be more take profits.
Mhm.
Do you guys see what I'm talking about?
I'm surprised right now.
Yeah.
Right?
Yeah, this is like breaking my head.
So that's what I'm trying to tell you. As soon as I found out about this, I was like, there's no way I'm ever gonna lose. I'm ever gonna blow up my account. Like there's no practical way. So now that we have this out of the way, so this is only 20%. Then we have a 30%, then 40, then 50, then 60. And trust me, all of these stocks, this is why I was able to make so much money on the other ones that I show you, because that's exactly how I played it out. Now, that's only 20%. Now, before anything, if we add 1600 to 8,000, 1600 times 8,000, it's gonna be equals pretty much 9,600. Now is when we're gonna actually take profits of 30%. We're gonna be taking profits of boom, 30%. So you're gonna be taking profits of $2,800, and then the rest of it you're just gonna let it ride until we hit 30%, then 40, then 50. If that makes sense.
Wow.
And everything that you risked, if worst comes to worst, you only lost $150.
Because you put the stop loss, the
Yeah,
limit.
yeah. Oh, and that's the thing. You always, always, always got to set up your stop. As soon as you buy, always set up your stop loss, because that's everything that I do. As soon as I buy, there's not a singular time when I don't set up my stop loss.
Oh, okay.
Yeah. So
Okay.
you got to
So
do it as soon as you buy, like immediately, because you don't know if the stock can easily reverse it on you. But that's the thing. We always just make sure that we do it as fast as possible. Also, one thing is that this strategy is from 30 to 40% profitable, meaning that out of 10 trades, you're gonna lose maybe 6 to 7 trades, but the other trades are gonna be winner trades. Now, do we know exactly which one's going to be a winning trade, which is not going to be a winning trade? No, that's why we always enter whenever we see our A plus setup, and whatever happens, happens. We get stepped out, but we win, we win, and at the long run, we're always going to make money because our winners are gonna pretty much are gonna outweigh our losers. If that makes sense.
yeah. Yeah.
Yeah. So now that we have all of this out of the way, and mind you, this is with a $30,000 account. If once you keep on growing, everything's gonna be on a compound move. Well, once you keep on growing, it keep on growing, it keep on growing, everything's just gonna be. You're gonna be able to allocate more money. Now, of course, if you decide not to go in, let's say at $46, you decide to go in at, I don't know, let's say you decide to go in at $47 because, for example, you missed it. Now you're gonna
Mhm.
be able to allocate only $3,000 because now you missed the entry, which is still fine because every single stock on average that I enter is roughly around for $3,000 to $5,000. And sometimes when I get really lucky, I'm able to allocate anywhere from $8,000 to $10,000 per trade. But that's actually maybe only 20% of the time. But on average, I'm always allocating from three to maybe $6,000 per trade.
Per trade.
Yeah, per trade. So now,
Mhm.
also one last thing, and it's gonna be pretty much the final thing that's gonna put everything into perspective. Now you're gonna be thinking. So let's say let's go back to this day. So let's say that you missed this entry because perhaps you were busy because life happens. Because I lose trades every time. So
Mhm.
let's say you missed this entry, right? This day, right?
Mhm.
Now, what do you guys think you guys should do up next? Do you guys think that you guys should go and re-enter the next day, or you guys should just let it be? I want to know from you guys.
Uh, yeah, enter the next day.
Oh yeah, definitely enter the next day. So now, how do you guys think
Because,
that we're gonna re-enter the next day? Because once again, we always have a strategy. We just don't enter just to enter.
yes, because in this case, so the SMA line is going up.
Hmm.
So we can play.
Okay, got you. So now look, this is exactly how we're gonna enter. So let's say we missed this trade on this day, which it would have been the perfect your A plus plus setup, but we missed it. It's fine because I missed trades. Today I missed a trade, but tomorrow I'm gonna re-enter as soon as market opens. The way that we're gonna re-enter is as simple as this. So I'm gonna use this for example. Let me just put this a little bit like this. I'm gonna use this. So let's say that, by the way, this is today's date, but let's say that this candles represent this following date, which is this one, right?
Mhm.
Okay, this is what I want you guys to pay attention. So let me go like this. So what we're gonna do is, let me just go back to the 1 minute. There you go. So what we're gonna do is we're gonna use the 1 minute, and this is where the 1 minute actually comes into consideration. You guys can use the 1 minute time frame or the 5 minute time frame. Doesn't really matter. I love to use the 1 minute. Now, what's gonna happen is that once the first minute candlestick opens up, it doesn't matter if it's a bearish candlestick or a bullish candlestick. Once 9:30 a.m. has hit on Eastern Standard Time, we're gonna look at the 1 minute candlestick. It doesn't matter how it forms as long as it forms. Now, what we're gonna do is we're gonna go into a chart and we're gonna set up an alert that the moment we actually break the highest point of the 1 minute candle, we're gonna go in. Now you guys can go with the 1 minute candle or the 5 minute candle, depending on how you guys want to trade. I usually use the 1 minute because I love to put in more risk. But if you guys want to put in less risk and want to be a little bit more conservative, you guys can use the 5 minute. But I always will love to use the 1 minute. So this is the 1 minute time frame. So this is exactly how I will play it out. The 1 minute time frame opened up, nothing happened. I set an alarm like this. Let me just create an alarm. Uh, right here, boom, create an alert. Okay, I set I don't know why it's not show or whatever. I set an alert right here, and once the alert hits, you guys can see that it just flies completely. And this is the thing: you're gonna enter once we finally break the highest point of the 1 minute time frame, which it could be right here, it could be right here. Whatever given time that we actually break the 1 minute time frame, we're gonna go in and we're gonna set our stop at the lowest point of the day, which in this case is gonna be 45.45. And just so you guys can have a perception, is the same thing. All we do is we enter and we set up a stop, and then we just let the stock ride, and it never touches our our stop loss, as you guys can see.
Hmm.
You guys can see that?
Yes, 45, 45.
Yeah, look. But in this case,
Mm-hmm.
once again, this happened yesterday, so this is pretty much fresh. But I want you guys just to notice everything, how's everything is playing out, specifically on this day. But now
And then
what happened?
I'm, I'm sorry. And then if it goes lower than your stop loss, so what happened?
Oh, it's automatically gonna get sold on Charles Schwab. Automatically gets sold. So that's the thing. That's what I'm telling you. Always set up your stop loss because everything just gets sold automatically.
Mm.
Yeah. So also one thing with I don't know why, but Charles Schwab usually I think that it all depends based on many factors. But in Charles Schwab, I'll say that out of 10 trades, maybe two of them, the stop loss doesn't hit. So I always double check just in case, because I have gotten burned. Pretty much when I started this whole thing, I have gotten burned majority of the times because the stop loss didn't hit, and I thought that I sold the stock, but in reality, I didn't, and I'm like, oh fuck, I just lost some money. But that's the thing. You always got to double check, especially if you got Charles Schwab. I really don't know with Wevo or Robinhood, but Charles Schwab, I do know that sometimes with the stop loss, they don't sell it automatically. Yeah, I
Mm.
wish I knew, but yeah, for some reason, for some commodities or some stocks, they don't sell automatically. But that's the whole thing. So this thing that I just showed you right now with the 1 minute time frame, this is how you're gonna execute on the next morning if you missed this trade right here. The next morning you're gonna execute it as such, and that's what I'm gonna do tomorrow with this one right here. It's gonna be, I think it's Prax. Let me see, is it Prax? Yeah, I'm gonna do that tomorrow with Prax. Can you guys tell me why? Can you guys see why?
Cracks.
Yeah.
So tomorrow will be the last one. The last. Okay. It's because the line, the SMA is went down and then it started going back.
No, no. So what's the first requirement? Remember, we got three requirements, and we have a bonus requirement, which we don't usually need to have it, but if we do have it, yeah, it's even better.
The first requirement is like when you purchase a stock, if it's going up.
Well, it's not when we purchase it. The first requirement is what?
Oh,
Yes, they have. So the first, the support and
No, not really. Nope.
no.
The simple moving averages, the estimate.
No, not really. Not either. But remember, we have the first requirement, which is gonna be what?
The stock go up,
Yeah, perfect.
going up.
Yeah, perfect. Okay, that's the first requirement. In this case,
Mhm.
we already went up as much as we can, as you guys can see. So we have the first requirement, and plus we already went up. But we already went up ever since we hit the 21 simple moving average. It's not that that matters, but as you guys can see, we have moved up. Let me just switch this to this. We have moved up all the way from here to the top, right?
Mhm.
Now, what we're gonna do is the second requirement is gonna be that the SMAs are all stacked up. Now, in this case, we have the 21 on top of the 10, which uh I usually don't like to buy, but in this case, we are showing a lot of volume. As you guys can see, both of these days we're showing a lot of volume, more volume than the prior days. Can you guys see this? That's buying volume.
Mhm.
So
Yeah.
besides that, the SMAs are all stacked up, but in this case, the 21 is on top of the 10 should be the other way around. But in this case, I will let it fly because we have some volume. And other than that, we are breaking structure. The structure that we were trying to break for the past couple of days has been the same, has been 18. I'm about 187.10, and we broke it today, and I completely missed it. So if I would have entered today, I would have made. And I'm telling you, I had this on my watch list. I just didn't know why my stop. I mean, my alert didn't go through. I would have made today 7% in just one day, which, as you guys probably know, the stock market itself, the S&P 500, can only give you from 8 to 12% every 12 months. I would have made 7% in just one day with one stock. Yeah. So
Wow.
So and then you would buy like this one at the uh your stop loss on that one for tomorrow, so it's gonna be the 187.
no, 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 no. You mean 197?
No, 187, the level two.
Oh, no, no,
So
no.
so you're gonna wait for the 1 minute and then
Yeah. So tomorrow I'm gonna wait for the 1 minute, and then that's how I'm gonna go. Now, if I would have gone I mean today, which it was on my watch list. I really don't know
Mhm.
why it did not hit. But if this is my watch list, as you guys can see, it's my focus watch list. It's Prax is literally the second stock. I just didn't notice it. But today, if I would have gone, look, this right here would have been my stop loss right here. And I'm gonna show you exactly how much money I could have made just today. But this right here could have been my stop loss. Let me edit this. I'll put it as red. Boom, boom, boom. Let me just make this a little bit bigger so you guys can see. So that right there could have been my stop loss, right? And just look at how this just flew after that. Right now, if we use our calculator to calculate everything, so as of right now, I have my portfolio at 3,800, and let's say we entered today at 187.10, 187.1, and stop loss was going to be at the low of day, which in this case the low of day is at 185.31, 185.31. I could have gone in with $11,000, and my maximum pretty much stop loss would have been 190%. About $190, as you guys can see. And now let's do some math to see how much money I could have made today with pretty much 1150. So let me see. Let me pull up my calculator. So we're gonna do as quick as look. Let's do as quick as 11,500 times 7%, which is how much money we made today. Today, I could have made $800 just with this one stock. That's not including the other stocks that we had, if that makes sense. Yeah, and that's with my portfolio that we have at 80 my $80,000. But let's say Your portfolio is at $30,000. You could have gone in with 8,000, so we multiplied. We're pretty much 9,000, so close to me, pretty much. So let's say 9,000. That's 90,000. 9,000 times 7%. You could have made $630 today only in this stock itself. Um, yeah, I hope that makes sense.
Yes. But and the money, for example, when go up like that, so how you take your profit out?
Oh, so right now we're only up 7%. We're not taking profits. We're gonna take profits once we're up 20%. So in your case, let's just do the math so you can somewhat see some visuals again. So let's say 190 times, my bad, 9,000 times 20%. So you're gonna be taking profits once you're up $1,800. Now we do $1,800 plus 9,000 equals, now all we know you have $10,800. Now we're gonna multiply that times 30%. You're gonna be taking profits at pretty much $3,200 once we hit 20%, if that makes sense.
Mm,
Yeah. So you see how everything is just a mathematical equation, and there's no way that you're gonna lose with once you put everything into perspective and once you put everything together.
yes, wow, but because so the tolerate risk, it's
It's nothing. That's why, like, I was just telling him today, like, when we were in the meeting, when we were heading to the meeting, I was like, wow, this all sounds like too good to. I want to see how it works, and right now,
Yeah.
that's just crazy.
So now you see that it sounds too good to be true, but you see how much work we got to put in the back end.
But yeah,
Yeah,
for
and,
sure.
and, it, and
yeah,
it makes sense, right?
Yeah, yeah,
makes sense. It's not just go and
Yeah,
buy without the strategy.
yeah. So now let's go and jump into the last thing of the equation. The last part is gonna be, now that you guys have this out of the way, just so you guys know, tomorrow I'm going into pracs because I lost pretty much. I lost today straight, so I lost an $800 today, but it doesn't really matter because how it's looking, we're having buyers, so I definitely have some credibility, and I have a lot of conviction that this is gonna go up in the next 20 to 30%. But even if it doesn't, the max that I'm gonna lose myself is only $200. So now that we have that out of the way, how you might be thinking, how or where do I find all of these stocks, right?
Mhm.
yeah. That was my question.
Yeah, because there's no way if I just give you this, but you cannot even put it into practice. Look, so how I find it is gonna be this right here. Let me just get this. It's gonna be. Let me go to Google. Okay, perfect. Where is it at? Okay, we have it now. I really don't know why it was not working. Okay, easy. So, have you guys used TradingView in the past?
No,
Nope.
No.
no.
Okay, got you. So TradingView is the same thing, the same concept as Thinkorswim. TradingView is mainly used for you guys to see the charts and all of that. If I wasn't using Thinkorswim, I'll be using TradingView, right? But the reason why I'm using TradingView is because I use it as my stock screener. Pretty much, I just set up a filter, and every single stock that I get right here is the stocks that I'm gonna be looking to trade the next trading day. And just because I have all of this doesn't mean that I'm gonna be looking at every single one of them. Doesn't mean that I'm gonna be trading every single one of them. I'm gonna be trading the top three to maybe five, or if every single one of them have an A plus setup, the setup that I just showed you guys. I'm gonna trade every single one of them. But what I do in the morning is I go through every single one of this. So let's say right here we got, you see this one right here. This was, I don't know, but this is par. This is another one, but I believe. Let me see if I'm not mistaken. No, never mind. So what I do in the morning, every single one of this, I see BKV. I just plug it in here. I go one by one. I go BKV, boom. Okay, do I like it? Do I not? This was good. I think I entered today, as you guys can see, had the same thing. We bounced at the 10, we had some volume, and today I entered. That is pretty much the whole concept. We actually went higher. SMAs are stacked up. We had volume, bounced right there, and we broke structure this day. So today I enter. If anything, tomorrow would be a good place for you. I mean, a good time for you guys to re-enter, just in case. But give me a second. Let me just take a picture of this and set it up on my watch list, just in case if I want to see it back again. Give me 1 second. We got. Okay, so as you guys can see, so what I do is every morning I just load up my screener, and I'm gonna give you the screener so you guys can pretty much use it as well. So every morning I load up a screener. I go per trade. I mean per stock. So BKV. I load it up. If I like it, I like it. If I don't, I don't. Then I go to GPCR. I load it up. Then I go to NABs. I go to DQ. I go to CNTA. I go to PAR. I think I entered on DQ today. Let me see. DQ. Yeah, can you guys see? Can you guys see what I'm talking about right here? Do you guys see the same strategy? Everything pretty much just repeating itself.
Yeah.
Yeah.
Yeah, so we made the huge move up. SMAs are all stuck up. We broke the 10 SMA with the volume could be better, but it's good. I'm not gonna lie, it's good. And then today we actually just flew exactly how I wanted it, so that's good. So DQ I entered today. Tomorrow wouldn't be a bad idea to re-enter, but today was actually a good day. But that's pretty much what I use, and these are the filters that I use. So what I want to watch on every singular stock for me to see is going to be the following. I want to see that a stock changes per day. It at least goes up or goes down for 5% or higher, meaning that we're not looking at slow stocks. We're not looking at stocks that are only going to be moving 1% or 2%, just like Apple or the S&P 500. We're looking at stocks that are going to be fast movers, the stocks that you can definitely make a lot of money. So that's why the other stock that I showed you moved like 7%, and that's exactly what we want to see. Now, the market cap that we want to see is we want to target mid cap stocks. Mid cap stocks are not penny stocks, but are stocks that are somewhat in the middle between penny stocks and blue chip stocks. So they're stocks that are the have potential to blow up all the way to a blue chip stock. So that's why this was actually one of the better ones. This is not a lot of risk as penny stocks, but still good enough. So market cap is going to be 2 billion to 10 billion market cap. That's the second filter that I always put on my screener, which is going to be TradingView. Now, the last four is going to be what we already talked about. I set up my SMAs. I set up the 10, 21, 15, 200. The reason why I'm telling you this is because if I wouldn't have the SMAs, this strategy would not be complete. I wouldn't be able to make money. So the SMAs are the whole reason why this whole strategy works itself. As you guys can see, I put it on my bad. My cats are just playing. I put it on my watch list. And my bad. I put it on my filter, and then I set up the price to be on. My bad. I set up the SMAs to be under the price. I'm pretty sure you guys are gonna be able to figure out. Just copy this whole thing. I'm about to send you this to you right now. So send you this whole thing to. So the what? Yeah, what happened? You hear me?
No. Yes.
Yeah, you were saying something.
No.
No.
Okay, got you. So I sent you that, and just go to TradingView, go to screeners, and then set up everything else. And trust me, after that, you should be good to go. And that is pretty much it when it comes to the strategy, when it comes to finding stocks, when it comes to risk management, when it comes to entries, exits, making sure that you enter at a good price, making sure that you set up your risk to reward and everything. I hope that that was as much as information as possible. You guys got any questions whatsoever?
No. And for example, for tomorrow, so if I decide uh, to do like a one trade, like are you going to guide me, or just go on the morning like and look at for the one that you're gonna do the same?
Yeah. So what I'm gonna, so yeah, I'm gonna guide you tomorrow, and what I'm gonna be doing is If you can tonight, just set up this watch list, and we're gonna have the same watch list tomorrow. But tomorrow, what I'm gonna do is, and usually, typically, what I do is, I already have uh, three other students that are pretty much copying my trades. But I think that as of right now, only two of them are live, and the other ones, the last one is just, I think he's on vacation, so it's gonna be three of us, my two students plus you guys. And what's gonna happen tomorrow is that I'm gonna be going stock by stock around 8:20, 8:15 my time. That'll be 9:15, 9:20 your time. And I'm gonna be telling you guys, oh, listen, guys. So today we have this stock that it looks like it wants to break. And we have a good setup. We have a lot of volume, so let's do that. And then what I'm gonna be telling you, okay, if I go into the stock, I'll be putting a screenshot into a group chat. I'll add you into the group chat, and I've been telling you I'm gonna go into this stock. I'm gonna give you the stop loss, and you can pretty much double verify yourself with the stop loss and everything. And I'm gonna tell you use. Oh, one thing that I always tell my students is always use the calculator, because the calculator is pretty much gonna tell you with how much volume you can go in yourself. So every time we go in, we always pretty much gauge the market and always go in using the calculator itself, the ones that I gave you, which is this one. So load up everything right here, the three inputs, calculate, and then go in. And if you guys need any help, let me know, because I'd rather you guys missed on a couple of dollars and then go in with the proper size than going in oversized and not setting stop losses and all of that. And yeah, that is pretty much it. And pretty much I just tell you guys I'm going into this one. I'm not going into this one. I'm waiting for this to break. This one's breaking. This is not breaking and all of that. By the way, CNTA is one of them that I went in today, and today we shut up 6%. Let's look at it real quick. CNTA. As you guys can see right here, this is exactly when I went in. Yeah, today we shut up 6%, but we came back down, but my stop's all the way at the low of this. And you guys can see the amount of volume that we had this day. That's why I went in. But so far, we're still waiting. And we'll see how everything goes. We'll see how everything plays out. But CNT is another one that I went in, and it's just floating around. I think I went in with $4,000. But once again, does that make sense for you guys?
Yes, yes, definitely.
How do you guys feel now?
I feel new.
More confidence.
More confident, right? Now you guys feel that you guys can definitely go in, make sure that you guys go in with the trades. Now guys have more value and all of that. Before this, how did you guys feel? Did you guys feel like talk to me? Like, how do you guys feel about it?
Oh man, it's like I say, like I've been doing like it for 4 years, but I just buy stock and hold it.
Yeah.
And so this about trading is something really, really new. So I never had like the opportunity to talk to someone that do it, teaching like how to do it, like because I learned like this way you are doing like a teaching, but put in practice. You know.
Yeah, yeah. So that's the whole thing. And once again, tomorrow, are you guys gonna be able to make it to our trading session, which is gonna be starting at once again around 8:20, 8:15 a.m. in the morning. My time and your time is gonna be 9 because I'm in Central Time.
Yes, yes, we're gonna be able.
Okay, perfect. And just so you guys know, because I know that let me give me a second. Where's that? Where's the calculator? Oh, right here. So I know that I put right here $30,000, but I'm pretty sure that most of the capital that you have right there is being allocated into some other trades. As of right now, how much capital do you think you got free up so you can actually have some buying power?
So the buying power, like for tomorrow,
Yeah.
I believe it is. I want to just put like a $10,000
Okay. Perfect.
for tomorrow.
So tomorrow, what you're gonna be doing is using the calculator. I'm pretty sure if anything, your son's gonna be able to help you out. So using the calculator, you're gonna put in 10,000. My bad, that's 100. $10,000, and then from there, you're gonna go in and put your entry and your exit, calculate, and it's gonna give you exactly with $10,000. You're only risking 50,000. So just do the math. How long it's gonna take you for you to blow up your account, which is gonna be pretty much never. What I'm knocking on wood, because of course anything could happen, but yeah, statistically proven, and with the mathematical equation that we have, it's pretty much gonna take you a while for anything to happen, if that makes sense.
Yeah, no, it's that calculator is it's crazy.
No, all good, all good. So once again, I hope that I was able to help you out, guys, with a lot of you guys thing. Hope that I was pretty much helpful. And yeah, if you guys have any questions, do you guys have any questions at all? I'm telling you, I definitely want you guys to ask questions because that just pretty much tells me that you guys were paying attention, you guys are interested in all of this, and you guys definitely want to perfect your craft, if anything.
Yeah, no,
Yeah, for
definitely
sure.
are you.
So for this, like for the trading view, is there like somewhere like a Chrome extension that will have to download for tomorrow, or
No,
the
with
website?
with TradingView, everything runs out of the website. That's why I usually don't use it. The only reason why I use it is because of the screener. But yeah, I mean that is pretty much it. So all you got to do is just go to TradingView, go into screeners, and just plug in the numbers that I gave you. Make sure that all the SMAs are under the price, and that is pretty much it. I sent you everything that you need to know and that you need to have. But yeah, that is pretty much it.
Oh, okay. Okay,
Yeah.
all right. Yeah, I think we got everything. And tomorrow you're only gonna do the one from Prax, right?
No, no, no. So tomorrow we're gonna be live because as of right now it's Prax, but as everything opens and as everything moves, things can change. But as of right now, everything is just Prax, and we'll see how everything goes.
Oh, okay,
Okay.
gotcha.
Yeah,
Okay.
but regardless, I'll let you know because we're gonna be on a Zoom meeting just like this, and we'll go after it after that, pretty much.
All
Okay.
right.
Okay, perfect. Do you guys have any other questions?
No, no, we're good.
Yeah, I
Well,
think we're
yeah, I hope that that wasn't a lot of knowledge for you guys not to be traumatized or nothing like that.
good.
No, no,
Uh,
man, but it's like with the right information, it's everything changed. Because this looks like a rock size. This looks like uh, it's not anyone can do
yeah.
it.
Well, one thing that I can tell you is that this, I told you before, but this is just like a game. I swear, I see it like a game, and it's like a game. The more that you put in, the more that you're gonna be able to pretty much get out of it. And for me, it's like a game. I used to play Fortnite a lot when it just came out, and that's the same. I would say that that's the same concept that I put into this. I see certain things that repeat itself, and I just go and redo it. For example, in this one, I see that we broke this level. I'm like, okay, I'm gonna go in, and I'm already expecting pretty much what's gonna happen. Even we hit or stop, or we're gonna go and keep on moving forward. But that is pretty much it. I see this as a game because with the proper information, it's pretty much like a game. I'm not gonna lie.
No, yeah, like I said, with the proper information, it's like a game. But when you don't, it's a lot of it's a lot of information. It's like
Yeah,
you feel lost, like you don't know nothing even about the candle.
yeah. One thing that I can tell you is that I used to. So I started trading in 2020. I was not profitable for 4 years. I started. My first month being profitable was December 2024. So it's almost gonna be a year next month. So for four
Wow.
years, I've been consistently losing money for 4 consecutive years, and it wasn't until last year when I started making money. And ever since then, I've been making money month after month with this right here itself. And I wish I could have actually made more YouTube videos since the beginning, but I didn't know that I was going to be profitable on a consistent basis. But now I can tell you that with the proper strategy and me trying it out month after month, kind of like perfecting it, making small little tweaks here and there, it has worked out really well. And once again, 4 years, I've lost over $150,000 just trying different strategies, trying things that didn't work out, day trading, trading options, doing everything and anything until I found this, and this was just a game changer whatsoever.
Wow.
Wow.
It's,
Yeah, yeah.
it's
So you guys are in good hands. But yeah, I mean, other than that, if you guys have any questions, you guys got my phone number. Tomorrow, I'm gonna send you a link around the same, pretty much 8:20, 8:15, if anything 8:10, my time, and we'll run it after that. We're gonna start live, and if you guys can download Thinkorswim, add the SMAs, simple moving averages, and yeah, that is pretty much it.
All right.
all right.
All
All
right.
right. Yeah. So I think we're all set.
All right, all good, all good. If you got, I'm gonna sent you a link to this video as soon as I edit it and everything, so you guys can re-see it. But yeah, other than that, yeah, pretty much that is it. And let me know if you guys have any questions. And yeah,
All right.
No, we are good.
oh, good. No worries then. Have a good night and talk to you guys tomorrow.
All right. You too.
All right, man. You too.
Okay.
Take care.
Bye bye.
All right. Bye bye.